Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new corporate conversation, a company which is bringing out its IPO, soon going to get listed on the bourses. But the interesting part here is that we are bringing out a company which has a very big legacy. More than 40 years again into the business and products which are widely known, household brands. Almost every student actually would have used their products and the name of the company is Flair Writing Industries Limited. And let me now welcome the management, Mr. Sumit Rathod and Mr. Mohit Rathod, the whole-time directors
Thank
of the
you.
company. Gentlemen,
Hello.
welcome to the show.
Thank you
Thank you.
so much
Thank
for
you for
having us.
having us.
Let's start about the products, the most interesting part, something which I think everybody knows. All the writing instruments, the pens, the pencils, the markers help us understand. And even now, actually, you're venturing out into making new bottles. So help us understand the products, the
Yeah.
business model, and how you've been sort of selling across India and now into exports also.
Yep. Thank you for having us on the show. Just to give you a brief introduction about the company, Flair is the largest pen manufacturing company in India, currently with the capacity of 200 crore pens annually, which contributes to about 65 lakh pieces a day. We offer a wide range of 700 products in the range of ball pen, gel pens, roller pens, metal pens, mechanical pencils, markers, highlighters, etc., etc. Recently, we have also entered into a creative range of products, which is mainly to do with the coloring range and the erasers, crayons, and oil pastels and everything. We are also the largest exporter of writing instruments from India. Currently, we are exporting to more than 97 countries.
That's huge.
We have, yeah, and we have 11 state-of-the-art manufacturing plants all over India. All our brands, be it Flair, Hauser, or Pierre Cardin, have been growing consistently for over the years, and we have a very, very good deep penetration in the market. With one of the largest and the strongest distribution network in India. We have currently, catering to more than 2,400 villages, cities, towns of pan India, catering to more than 3,15,000 retailers and wholesalers. So we have a very, very strong hold in the distribution. And, another diversification which we would like to talk about is a new venture which we entered into, steel bottle manufacturing, which is also a vacuum flask. As we have why and how we entered in this category. Just to let you know that we have our OEM customer from US who came to us with the idea of manufacturing steel bottles for them as their China plus one strategy.
Ah, okay.
And
Makes sense.
yeah, so we as a family thought, like, we grabbed the opportunity thinking that it fits in our philosophy of healthy top line and healthy bottom line. And at the same time, it was catering to the same target audience, be it students or office goers or use at home. And it was a replacement of China imports, which is currently the majority of the bottles sold in India are imported from China, and also promoting the vision of Make in India. So we
But then
thought it as
also,
a,
was your
yeah.
OEM customer giving you a sort of a committed volume, like a contract, committed volume, offtake, committed offtake?
Yes, so we have a, because since he's our old customer for almost 17, 18 years, so we have a basic understanding between them that, they would buy the production of production lines for them. And then we have invested in one more production line, which we would be selling it in domestic market.
Oh, that's great. So
Yeah.
basically, three production lines. One I think is already commissioned in March,
Yes. So we
and
have
two more are getting commissioned in this year, in
come
this financial year.
in this financial year. So the commercial lot of production will be starting from the early, maybe next month or next quarter.
Oh, that's very good. So actually, we're talking about a new category, but in that new
Hmm.
category, two production lines, two-third of it's
Yeah,
already sold out because it's already
right,
committed offtake, and
right.
then one actually are going to actually then push it into the local domestic market.
Right.
Yep. Yeah.
Okay. And the margins are almost same. Like how's the margin for steel bottles?
So, it's a basic philosophy for us that, whenever we enter into new verticals or new production lines, we keep in mind that, we have to maintain our healthy bottom line of 19.5 to 20% EBITDA level.
Okay.
Yeah.
Okay. Sounds good. So that's something I think, like before I actually go back to the writing instruments, what sort of revenue could be actually imagined from those two production lines of steel bottles?
So each line has a healthy ratio of asset turnover of around 4x. So we are expecting to make it at least a 150 to 200 crore production line as a
Okay,
total as a
150,
business in the coming
200
years.
per production line.
No, as a total production line of the total setup in the coming years.
Oh, out of the, you means 150, 200 crores out of the three production lines.
Yes.
Okay, understood. And now let's go back to the writing instruments. I think the biggest curiosity, I think, for the investors, for the viewers, would be that what makes Flair really so special, because you are the largest, like amongst the top three, top two, the largest in terms of revenue. So, what is the secret formula here? What is the competitive advantage here? How actually you're able to launch brand after brand and then basically build volumes on it? Help us understand that.
So basically, it's a combination of a lot of things. Number one is, of course, the legacy of Flair brand, which is almost there for 50 years now in the industry. So we have a lot of trust and among the distributors and the wholesalers, for Pan India. There's a lot of trust towards the brand, and at the same time, we have a robust production line which has a very, very good process of controlling the cost, and we have a strong R&D team which keep on giving new products all the time, to make us competitive in the market. It's always nice to be ahead of the competition so that you can maintain your leadership position all the time.
But then I'm also trying to imagine like there would be other peer brands. Some are listed also. When you have such a large capacity, which is 200 crore sort of instrument capacity, does it also lower the overall cost per pen or per instrument? Is that something also which is giving you low cost competitive advantage, or that is like how it is? Do you have an advantage there?
So there are two factors to it. Yeah, of course, economy of scales in like any other business model, it does help in lowering the cost. But also at the same time, looking at us, we have a very good mix of product range. So we are
Mhm.
present in in mid premium, premium as well as the mass market. So that itself also helps us in achieving the healthy bottom line that we always target to.
Okay. And does that also help you in lowering the marketing cost per instrument also? Because when you have economies of scale and then you have an established brand, then you don't need to spend exactly the same amount which any small brand or mid-tier brand would be sort of expensing. Is that also something a right assumption?
Yes. So what we did a couple of years ago, we concentrated a lot on penetrating the distribution network. And
Hmm.
currently, like we mentioned, we are catering to 3,15,000 retail outlets.
Hmm.
So now going forward, what our concentration is to increase the shelf space in those retail outlets as well as the value base, because we have so many multiple brands in the range of more than 700 plus products. So of course, it
Right.
does help in lowering the overall cost of distribution.
Is how are the entry barriers there? Like, is it easy for any other brand, like there are Camlin brand or other brands? Can they actually come and sort of flood the market or replace? Like, how the sort of competition here?
So to answer that, the competition is tough. It's there are a lot of competitors already in the market, and they also have their own legacy. But being at the top of the game is which Flair is known for, and we have to, as I said earlier, it's a combination of everything which keeps us going and
My
maintaining our leadership position. Yeah.
no, my question was pointed in the direction of sometimes when it's a competitive market, large population, and the brands are selling almost at the same price, but still some brands are able to achieve far higher profit. That is largely because of their cost competitiveness. So,
Yep.
so what I was actually asking you that if the price is very competitive, which implies that you would be able to sustain it very easily, right? Because you have
Yeah,
the cost competitiveness. So is that
yeah,
something where we are understanding it rightly?
yeah. You're right in that way because of the yeah. And
Uh,
also, I would like to add one more thing here, because given the brand what we have Flair, Hauser, Pierre Cardin, and the com. So we are manufacturing 700 products. So the
right.
product mix and the products in different price range is very important. So the entire mix and the balance between the mass and the premium and mid premium is what makes us different than the peers.
Makes sense. Makes sense. And also very interesting question. Like the volume growth over the last 2 years has been stupendous. Like I won't even say it is great. I will say it is stupendous because 100% volume growth is not easy to achieve in such a like competitive
Yeah.
market. So help us
Yeah.
understand how it was done.
So, so if you look at the 2 years ago number, 22, 21, 22 was mainly to do with, it was earlier than that, it was a COVID affected year and we had a rebound. So we achieved in 22 the pre-COVID levels, which was at 570 crores. And last year was, of course, the entire industry was re-rated where major players grew by 30 to 35%, and we being the industry leader, we grew by 65%.
Hmm.
Yeah. So, the entire industry was related, and it has to do a lot with the government pushing the education at the rural level, focusing on the secondary education, the disposable income going up, and even I would say now currently, people are spending more on education, kids' education, and the young population, their buying pattern has changed totally.
Right, and also the sort of icing on the cake was that your revenue per instrument actually has increased almost from 4.74 rupees per pen or per instrument to now to 7 rupees plus. So this is a double bonanza. One is volume growth, and second is the pricing growth, and it resulted into a very sharp revenue growth. So how was it a product mix? Largely a function of product mix.
So,
Yeah,
as I mentioned earlier, it was always to do with the product mix, what we have, because we have Flair, Hauser, Pierre Cardin, and we mix the product in such a way that we maintain the healthy balance, and that's the entire reason for that. And if you look at the historic track record also from 2017 to 23, we have been growing consistently. Which out of which 10% would be the volume growth and 5% would be the value growth.
Right, and a question to either of you. Working capital, something which I think all the investors will be keeping a very good eye on from the perspective of cash flow generation. That also has been worked on very nicely because now it is almost 5 months of working capital cycle instead of 12 months earlier. So, how actually, what were the measures being taken?
so I think during COVID we did a lot of exercise, and as the industry also reiterated, we did kind of a recorrection in our system as well, and that's why we concentrated that there are many means and ways to control the working cycle. That is both at both ends, also at the manufacturing end. And also at the the distribution and sale app. So now because we have a sales app in position, so we have a real time data of the market, and of each super stockist and the each retail or lane of the country. So that helps us in distributing the product in a proper manner, in a more systematic manner. And the same way, the ERP system from the manufacturing end has helps us in reducing the extra stock. And we also, because we have economy of scales, we had brought that into the whole sourcing element, and that has helped us. But this is a subject which will keep on, we have to keep on working and keep on improving. So going forward, we will be concentrating more and more on this as well.
Yeah, I was greedy to ask you towards the last bit of your answer. Is there further scope? Do you imagine over the next 1 to 2 years this working capital cycle can further reduce?
So yeah, there's always a little scope, but not to a very large extent. But definitely, there are few days that we can correct into and bring it on the on the table.
Right, and now let's come to the exciting part here, which is the capacity and the fundraising. So let's go first on your fundraising part. What's the amount of funds you're raising in this IPO, and what's the usage of those funds?
Yeah. So in total, we are raising 666 crores, out of which 365 is primary and 301 balance is the OFS. So in 365 crores, we have already done one round of pre-IPO allotment to Volrado Ventures, which is a part of Inam Group. And the balance 292 crores we are going to raise, out of which 143 crores is going to go for greenfield and brownfield expansion. 43 crores is going to go towards the repayment of debt. 77 crores will be used for additional working capital, and the balance would be the general corporate purpose.
Okay, and it's about 140 crores is actually going for expansion. So now let's understand uh, where and what type of capacity is getting expanded, and when it could be getting commissioned.
So it's a combination along 3 years. So part of it will be in the brownfield. So the existing plant will be getting semi-automated and automated to help us further decrease the the cost of manufacturing and upgrade the quality of the product. The greenfield project will be more to do with expanding the manufacturing base. Majorly in the Valsad, where we already have one of the facilities, so we'll be coming up with a new, manufacturing building over there. Also, this is a expansion for pens as well as for the creative range. So going forward, as we are concentrating on both the range, we will be expanding and making more and more of the creative range in-house and controlling the quality. And as the target for the creative range is, and the growth pattern is a little higher as compared to the industry. So that's where we are going to concentrate and use these funds, to manufacture more and more products.
And the asset turnover is expected same 4 times.
So asset turnover in writing instrument and creative industry is almost 3.5 to 3.75%.
Okay, and when you're going to expense these funds, how much time do you think the capacity is going to be up and running? Like 12 months? Like what could be the rough estimate?
No, this will be a investment in 3 years. So out of the total, yeah, so out of the total funds, 114 crores will be spent, 145 crores will be spent in the first year, around 130 in the second year, and remaining will be in 2025, around 15 to 18 crore rupees.
So I'm just doing my own maths. 140 crores like is getting expensed, generating a turnover of 3 times at least 400 crore plus revenue on a conservative basis. That commissioning could happen like after 2 years, like when the we like as a layman actually could start imagining.
So I think effective turnover will come into play, in the 2025. But of course, as we do invest every year, so some capacity expansion will happen year on year. So that benefit we will be utilizing from the asset turnover perspective that you have mentioned.
Sure, but like just a disclaimer, I think we are just doing a sort of capacity-based calculation. There is no forecasting involved there. So perhaps
Yeah.
that's one part here. On the debt side, already your debt is it's like a very healthy sort of balance sheet here. And
Yeah.
once you pay the debt here, I want to break up here in the existing debt. How much is working capital debt and how much is the term debt?
So term debt is only 43 crores,
Okay.
which we will pay once we come out with the IPO, and the
Then
balance
actually
is only the yeah, it's
term debt
very
will go to zero then almost then.
yeah,
Okay. So then it will be all working capital debt. So
all
balance sheet actually,
yeah,
yeah, will be absolutely
yeah,
almost net debt will be zero if I just take
yeah,
out the working capital debt.
yeah. You're right.
Okay. And the last part would be right now utilization is around 70 to 74% for the writing instrument. Like, is that right?
Yes.
Yeah.
So normally because we have a various range of products and the kind of a product mix and the different colors in each particular segment. So that's almost the maximum 70-75% is almost the maximum utilization that we target. And every time that we close to reach to 70% of our utilization, that's when we plan to do the expansion, and that's where we spoke about earlier.
Yeah. So my last question would be that given you're going to take some quarters before the new capacities start coming into play, is there a risk that you will start actually missing some revenue opportunities, like, or you'll be able to make up to that with respect to current capacity because your current pace of growth in the last 2 years has been very, very strong.
We already pegged that estimate in the current production capacity, and we are quite confident that it will not be of any hamper in the targets that we have set.
Well, on that positive note, and with all the sort of good wishes from our
Thank
side
you.
and from our view side, we give you a sort of all the wishes for a very successful IPO. And thanks a lot for coming on the show.
Thank you so
Thank you
much.
so
Thank
much
you
for
so much.
having us. Thank you, sir. Thank you.
Thank you.
Bye-bye.
And dear viewers, I hope you enjoyed this conversation. For now, it's a wrap.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.